There is an awful lot going on right now, but markets are kind of not terribly, apparently not interested in peace in Gaza. The shutdown, of course, is drying up the news. There's not much economic, almost no economic news that's coming along. And then we've got the Fed governors. I think between all the Fed governors and the Fed presidents, they probably spoke at least maybe 24 times this week. Maybe that's an exaggeration, but not by much. But they're not saying much of interest. I keep asking Grok, please give me an update, give me the top things that these guys are saying, and it's not really all that interesting. So what are the markets doing? Well, they've been headed slightly higher, and now this morning they're slightly lower. But the S&P and the NASDAQ, as of last night, were at all-time highs, and this morning they were, for a minute, even higher, but now they're kind of backing off a little bit. These markets, the overall equity markets may or may not be overbought right now, but they certainly are maxed. And so I'm not shocked that it's hard to keep going higher, although starting next week, we're going to be getting the earnings, and that should trigger something. At least we'll have that news if the folks at the federal government haven't figured out how to get things back going again. I as I said on one of the programs yesterday, I don't think the Republicans don't seem to be that concerned that government is not operating. Why? Because we know that it's probably better. Things will probably go better when the government isn't operating. Anyway, Tesla is still not getting any earnings per share updates. This is surprising to me. There have been a few, and they're all to the upside, or all but one, I think. There's been like 6 or 7 updates. All but one has been to the upside, but these have not been coming from the major analysts. And I think that's kind of surprising given the shipment and deployment beats and the fact that we're getting very, very close to the earnings call, and you'd think we'd be getting some earnings updates. Anyway, the nonsensical NHTSA investigation is probably weighing on Tesla. You might have already heard about that. If you haven't heard about that, we'll talk about it in a minute. Okay, this is from Dan Ives. He says, okay. On October 8th, 2025, Wedbush securities analyst Dan Ives, that would be yesterday, a prominent Tesla bull released an investor note reacting to Tesla's announcement of the new lower cost trim levels. In the note, Ives positioned these affordable variants, as we know, priced at $37,000 and $40,000, as a critical initial move in Tesla's strategy to regain a sustainable 500,000 vehicle quarterly delivery run rate, which the company has struggled to consistently achieve amid softening EV demand. Ives directly stated, "We believe the launch," this would be quote, "we believe the launch of a lower cost model represents the first step to getting to that 500,000. He emphasized that these trims align closely with the pricing of higher-end variants when factoring in the soon-to-expire EV credit, making them essential for broadening Tesla's total addressable market and stimulating volume growth. However, he expressed mild disappointment with the execution, saying, "We're relatively disappointed with this launch as the fair price is only 5,000 lower than the Model 3s and Ys." I think that's fair. And surprising, actually. This modest reduction, in his view, underscores the urgency for Tesla to accelerate affordability initiatives to offset potential demand pull forward because of what we know, the 7,500 going away. Tying this to the broader strategy, Ives highlighted the interplay with Tesla's autonomy push, particularly the rollout of full self-driving version 14.1. He praised the update for features like reduced interventions during drives and enhanced parking options, calling it a game changer that could supercharge adoption. And of course, this is where the real money is. Ives projected that combined delivery ramp-ups with FSD penetration and accelerated cybercab development could propel Tesla's valuation dramatically. He continues to believe that Tesla could reach $2 trillion market cap early in 2026 in a bull case scenario and $3 trillion by the end of 2026 as full-scale volume production begins of the autonomous and robotics roadmap. Of course, you know that $2 trillion would be $600 a share, and $3 trillion will be $900 a share. He described this as the start of an AI-driven march for Tesla's valuation, with FSD and autonomy as the golden goose. Overall, Ives maintained his outperform rating on Tesla's $600 price target, viewing the affordable trims as pragmatic bridge to higher volume quarters like quarter four, when the real upside lies in Tesla's AI and robotics ecosystem. The note reflects cautious optimism, bullish on long-term trajectory, but pragmatic about near-term hurdles like tax credit loss and modest price cuts. So we have the NHTSA investigation, and that might be weighing on the stock. The new investigation is looking into 6 total instances where a vehicle ran a red light. Also, a few instances where the vehicle went the wrong direction when trying to make a turn or make a lane change, got into the opposing lanes. So I'm not really clear on why this is a problem. Okay, so there's a couple of thoughts here. Number one, we have these are not the current, this isn't the current, how can I say this? They are investigating FSD in a previous iteration when the new iteration is now in the cars. So how can Tesla do any kind of a recall or even an over-the-air update? They've already done an over-the-air update, a significant over-the-air update. So if NHTSA decides that the car was not executing as well as it could have, there's no way for Tesla to remedy it because they've already, anyway, I think you get my drift. The other thing is wouldn't the question be how many humans in that same number of miles would have run red lights or gone the wrong direction, moving over into opposing lanes or any other kind of human behavior that might have caused accidents? So I think this is a very foolish thing. Not sure how it helps NHTSA in terms of evaluating what's happening with full self-driving. All right. How about this? This is from Chat GPT 21. That's the handle for Chris. It says, I don't see enough people talking about this. He does a video of FSD beta, the 14.1, autonomously navigating McDonald's drive-through, which I got to tell you was the number one thing my car won't do is it won't go through a drive-through on FSD. Of course, remember now I'm on hardware 3, I'm on old 12 point whatever. The car understands the entire social sequence, he says. It knows to stop at the ordering station. It knows when the order is complete and autonomously pulls forward. At the final window, it leaves the exact moment his card is returned and when the food is handed over. It's not just following a path, it's recognizing that the transaction is finished. Seriously, Tesla, how does this work? Is it parsing audio cues? Is it recognizing specific handoffs with its vision? How is it doing this? So that's a good question. Elon Musk says this morning, he says, in a technology race, the company that innovates the fastest wins. He says, all you need are 1 billion AI chips, 1 terawatt of power, and 100 million robots. Yeah, that will do the trick. We've got Art, how is this? 𝐓𝐡𝐮𝐲, 𝐅𝐷𝐸𝐼NGENIO. If you can find this person, it's also known as Oscar AI. He's quoting Reuters. The agency said it has reports of Tesla vehicles using FSD driving. Oh, I already gave you all that. So in total, they're reviewing 58 reports of issues involving traffic safety violations when using FSD, including 14 crashes and 23 injuries. By the way, it doesn't say whether any of those crashes were Tesla's fault. Tesla might have been in the wrong in terms of violating a traffic, but maybe the other cars hit the Tesla, which mitigates at least. The new investigations come, okay, hopefully NHTSA will look at all their investigations. All right, I already did all that. Grok, I asked Grok. Grok agrees with me that quarter 4 EPS could be 85 cents if margins hold up reasonably well on auto, if we hit 500,000 shipments and deploy 15.5 gigawatts. I think that 500,000, as we talked about last night with Brian Wang rather, is pretty much a given. I think the 500,000 won't be that hard. And 15.5 gigawatts also should be in the bag, in my personal and humble opinion. Pundits see Tesla in a bullish continuation video. This is a technical analysis. This is what I asked Grok to do was look at all the technical guys, all the guys on X that give technical analysis for Tesla, and what are they saying about the next 30 days. Pundits see Tesla in a bullish continuation phase, but warn of a healthy pause or shallow pullback to reset overbought metrics. Key supports cluster at 400 to 420. Which is exactly where we are this morning, with resistance at 460 to 488, potentially capping gains unless volume surges. Bullish setups include engulfing candles, pennant breakouts, and alignment above key EMAs. Yeah, some of you probably won't even know what I'm talking about, suggesting room for 450 plus if the 400 to 414 to 420 holds. Again, right where we are right now. Bearish signals like RSI divergences in upsloping parallels point to a possible drop to 380 to 400 or even 367 in a broader market correction. Intraday bookmap analysis shows buyer absorption at 440 lows, supporting a rebound, but with heavy sell liquidity above 454. Overall, the bias leans bullish, 70% of the views with targets at 416 to 460, but traders advise trimming at 452 or waiting for macro prints before deploying aggressively. A close above 429 would confirm higher highs. So today, what we need to do is close at 430 or so. All right. Tesla according to link number 1, Tesla got approval to test FSD in Sweden. According to the Swedish Transport Administration, Tesla received approval to test FSD on all state highways and expressways in Sweden. The approval is valid for 3 cars owned by Tesla. So they get to test 3 cars. Did you know this is Randy Kirk? And you know what to do because it helps the algo if you do those things. You know what to do, right? Can you say them for me? Out loud now. Okay, Forbes. Unlike speculative mania of the past, today's AI wave is not made of vaporware or eyeball metrics. It is grounded in tangible demand, real products, and astronomical computing requirements. You see, a lot of people are saying this could be an AI bubble. A lot of people are saying, oh, this looks like the 90s. Tom Lee, for instance, he says it does look like the 90s. It looks like 1997, which would mean we have 3 years to go before there's any problems. So this Forbes article is saying that the definition of a market bubble is immutable. You can't change it. It's very clear. A staple of classic economics. Excess supply. Bubbles burst when there's too much of something and too few willing buyers. Saying that is not the case right now. The reality today is the inverse. This is a market defined by scarcity, not enough chips, not enough data centers, not enough energy to fuel them. NVIDIA's quarterly sales of more than 40 billion underscores this reality. Those chips are booked solid. Jensen just yesterday said that demand is up. When demand for the core component compute drives shortages, you have structural transformation and not speculative excess. And by the way, Jensen also said, and other people are talking about the fact that you don't really have anybody but the megascalers making most of these purchases. You don't have the sovereign governments. You don't have the smaller purchasers coming in yet. There's lots and lots and lots more people that are going to have to buy these chips in order to be even modern, even to be able to get there. The skeptics insist this must all implode, perhaps because they missed everything from the cloud computing to digital advertising. But AI, it isn't just another theme. It's the accumulation of decades of evolution in computing. Every layer of the stack, from power generation to semiconductors to enterprise software, is being rebuilt for an AI-first world. That is a structural transformation. And that entire thing is going to be covered in phenomenal detail and in great writing by the 9 authors that are coming together for the AI Rising book, which might be available for a pre-sale next week. The inflation numbers this morning, we've got Truflation at sorry, 2.23% on the overnights and 2.19% on the year over year. They aren't usually that close together. Trump's numbers keep going up. He's back to 49% after falling to 46. I'm guessing that this Gaza peace thing might give him some more positive numbers. We'll see what happens over the next few days. Okay, markets are rebounding a little. Well, Tesla at least is rebounding. It was down more than this earlier, but now it is back up actually to 432.38. I might have misspoken earlier. I don't think we were ever at 420 this morning. 427.51 was the low this morning. We are now above 430, so that's good. Dow Jones, so Tesla right now is down 1.44. The Dow Jones is down 0.35. NASDAQ is down 0.28. S&P down 0.25. Very, very close there this morning. And all of the Mag 7, except for Meta and NVIDIA. Meta and NVIDIA are up, and NVIDIA up strongly, 193.70. Is it going to get to 200? That has been the question for a few days. The VIX is at 1675, which is, still very bullish. And the Cathie Woods are all down except for PayPal this morning. And the bonds are up this morning. Oops, let me double check that. Bonds are up 1.1 basis points at 4.142. They were as high as 4.15 earlier, bouncing off that number again. I got that one right over and over again. I've been solidly correct on the 4.15. Oil is down 24 cents this morning, 62.31. Natural gas up 0.39% at 335. We've got gold down 35. Now that's it, 36.50 at 4,034. Now, I said it wouldn't go above 4,000. And I've been feeling I was almost ready to capitulate on this today. I was almost ready to say, nah, I guess I was wrong. But you know what? I also said it could go above 4,000 for a day or two, and that would not mean that 4,000 isn't the top, just like happened with 415 on the bonds. So I'm not going to capitulate yet. We're at 4,036. I think we go down below 4,000, and I think gold is going to have trouble staying above 4,000 and might go back into could be looking at maybe a 10% pullback. Also, some people saying the dollar is about ready to rally. I wouldn't be surprised to see that as well. Silver this morning is down 0.91% at 48.55. Copper up 1.50. And there you go on those. We've got the dollar this morning up against the euro, down against the yen. So, mixed. Bitcoin down 2,035. Not able to get back to all-time highs, sitting at 121.5, and Ethereum at 4,321, down 4% this morning. So that's a big, big drop for Ethereum this morning. We have got, that's it. Oh, that's all the numbers there are. All right, so what's coming up later today? All right, this is Thursday. So usually on Thursday, we would have a Bradford Ferguson, and then that would be followed by Cern Basher, which is one of the best days of the week. And guess what? That should be what's happening. So look forward to Bradford Ferguson and then Cern. Last night, two amazingly, I got to tell you, every night it's just so amazing. Last night we had Brian Wong, outstanding show, unbelievably good show. A lot of what we talked about last night is still quite important today, even though, we were talking about, he was talking about the technicals and some of the aspects of where he thinks the stock price is right now on Tesla, as well as other things. That card will be up there, as well as then after that, do you know that our buddy Phil Beisel got picked? He got Elon Musk gave him a repost on a very, very dense article about the FSD 14.1. You guys watched that, a fair piece, but not as much as I would have expected. So that card will be up there too. Both of those are good if you got some time today to check those out. All right, that's all I got for you right now. I think I'm going to say adieu. It's been great talking to you.